Wake up, goddammit. Welcome to MARKETcast with Unk and Market Monk. Morning, P. How's your week?
Really good. Caught some of the healthcare rotation and mainly focused on that. I've just been kind of looking at how some of the other stuff reacts. Tech's been doing a lot of kind of the pop and fade, and then we had the big move down Thursday. Not much follow through Friday on that though. So definitely a big week ahead with earnings and Fed stuff. So things are getting a little overbought, but I don't know that you're going to see a big whatever they call it, regime change or anything like that. I'm just kind of looking for pullbacks to levels mostly.
Yeah, I'm decent week. Swings are still swinging. Definitely feel like we're getting to the top end, but still in that boat of like, why do I sell? A lot of things when they're pretty much in a great spot and still a short-term tax burden. Um,
Yeah.
so for me, like, there's no reason to really trade around that. So I'm trading around the smaller core. Nailed Nikola Monday morning though. Pretty good walkthrough in the group. Anyone that walked through that one, just nailed pre-market low, as planned on Sunday, and that had pretty good range. So kind of taking small dubs with the smaller positions. Our smaller share sizes. You'll see a lot of dollar, $2, $3 from me, just because that's where the account's at.
Yeah.
It's just
Well,
easier to play. Then the PGY got into that a little bit. Scalped some LGHL. I'm still with those reverse split um, names that have been around for years. Those have been great. Root kind of a mention. Um, just have a lot of range to trade. But yeah, that's what I've been. That's where I've been. Then a couple rounds of golf, a little bit of concrete. Kind of
well,
watching
yeah.
watching paint dry with these swings, just waiting for him to get past the tax date, which a lot of it isn't till January, February. To be honest, I didn't get much in October, so I'm waiting.
Well,
I'm
yeah.
pretty far out on a lot of that stuff.
The yeah, a couple lessons from weeks for me. The extra work midweek really pays off. The kind of the stuff I'm finding that from the Monday Tuesday buyers that has some follow through, and then there's some that if you just see a spot where it's down and they just can't seem to break it down further, just getting into a little bit of a position can do really well, and that happened with AMC. I had posted a leap like way the hell out at in the money. 2025 was like $150 at 4C,
Yeah, yeah,
and then AMC did what it did, and we'll see what happens Monday, but like that's gonna open really nicely, and it wasn't having theta decay. I think it went down like $10 or something like that, and I mean, what's the risk there? So AMC breaks down to like 350, 325, something like that. It goes down $60. You can cut it or keep it, whatever. But these plays that they have news. There's going to be something with the courts or something where there's a lot more room above. You find a way to just get a little piece of that. Then you don't have to time it, you don't have to chase it, and you can just then decide, what you want to do. And I think we're just going to see a lot of that. There's a lot of stocks like that I think we'll go through, especially around the dollar level, that are just going to get found and just move or squeeze, whatever you want to call it.
no, the elephant in the room on that one is timing them, and it's hard to do, and that's why you use
Yeah,
shares and leaps. Um,
yeah,
I remember when we were talking about AMC at $4, that the absolute floor, even in COVID, was out of business. COVID low was like $2, low twos. So yeah, the downside there to, I mean, not that you go to the squeeze high, but even talking the fair market value of the company being somewhere from $7 to $11, you're still
yeah,
you're still over 100% up on the upside, in most cases with that thing. with the chance of a squeeze taken off. Carvana was the same thing when we were talking about it at $7 and $8. You know, it's like either they're going out of business and you can lose this position, or this has the potential for a massive move just to get back to fair market value
So
for the company, or a squeeze potential. And there's a
um,
few of those for sure.
yeah, and I mean, honestly, like I was thinking that we got, you know, an overextension through the full move when it went over 2150, and then you had that crazy move to 30, and then it came and checked back, and obviously went crazy from there. I mean, hindsight, yeah, it would have been nice to keep my full position at like $7, but kept a little, and it's still nice to see that happen.
Sure,
Uh,
sure.
but yeah, Carvana is just a good example of what can happen, and really also the dominant narrative on Twitter was that it was going to zero, and it's just another example of the Twitter. I don't know what, like amateur comedians or whatever, like the stocks that they love to make the punchline and puff their chest out like they're gonna short. They're these big short sellers. Like there's not much substance to that. I mean, you should have been shorting Carvana if you wanted to at like $280 or something, or all the way down. Same deal with Coin when Coin was $40. Just don't. I would not put any stock in it, anything those people say. We've got charts and we got option flow, and we kind of go from there, and it anticipates news in some ways, reacts to news, and then I think that's really a better way to do it than to just say the fundamentals are crap, the company's crap, it's going to zero. Like you can't trade off that.
No,
Those macro trades have not worked all year.
no, we're seeing that in the EV sector right now, and I think we're ahead on that, me and you. But
Yeah,
that's for a
yeah,
different video.
right.
What I don't what like the Carvana, I got 100 names I could bring up from CCL Piton. We could go on and on and on and on and on. Hood. I mean, there's a ton. I mean, you really could. The names don't stop that were under $10. Some of them were even closer to five or under that. Fubo, dollar.
Yeah.
All these guys, like, I don't understand why people would play options, even long-term options. Why you just wouldn't play shares? Because you can define your risk at that price. If you only want to spend $74, it might be only 13 shares or whatnot, but
Yeah.
you can kind of define your risk, right? Like share on the share side, you can literally define, I want to put $125 into this, and the time doesn't kill you. Where on options, you kind of got to find a contract to fit that account, right? Like that's kind of how
Yeah. Oh,
that
yeah.
works.
Absolutely. Right.
Like
Right.
you can't
And
play
I mean that's
Tesla. You
why.
can't play Tesla with a $200 account, can you? On options, that doesn't work. That's not possible, is it?
No, I mean it's pure. It's purely lottos because you can buy early in the week. You can buy one contract that's kind of somewhat close to money, but you get to Thursday, Friday, play your full port, your $200. That can go down 50% in about 30 seconds. So, it's not the way to do it.
Yeah, and you
I
could have
think.
three. You could have three share positions. Not in
Oh yeah,
not in Tesla, but in general, with a $200 account, you could have three share positions, have 30, 40 shares apiece of some of these lower stocks, and um, yeah, yeah. Sorry, I just wanted to prove that
right.
point.
So, to me, options. The best use of. I've been at this like a while, and I've tried and studied options on everything, but the best kinds of options, and I think people in the room are seeing this. A low IV healthcare or industrials, mega cap, some tech, whatever that's a high dollar stock that's 300 $400 stock,
Okay.
and where the 1% move is significantly moves the
The odds.
premium.
Yep.
The stock moves slow enough that it's not likely to just kill you. Like you have time to get out. You see it go down $50 or whatever, and you just get out. And with the reads I'm having, whales aren't really hiding what they're doing as much. So that Humana, or UNH, like they make these huge moves, and that's where if you you do it right and you're able to, try to keep one or buy it far enough out or, whatever, that's where you do sometimes get the home runs, the 200 to 1,000. And you're not really risking a lot in doing that. You're already green on the position usually, and you can just, decide when to get out. You just learn not to be greedy. You learn not to have regret it when it takes off like that. But those give you some control, and it's much better than the 150% IV mid cap that is just going to wildly move in either direction, because the percentages are so large on those smaller stuff. I mean, you're right. I mean, shares, you can do shares, you can still get your 10-20%. Wolf was a good example. Yeah, Wolf has options, but I mean, why? It was $2. I mean, you can get a lot of shares and you can get this 20-30% move on them. So
I had a little note section, and Wolf was in there.
Yeah,
just because I wanted to point out 369 to you.
yeah.
I'm over here pulling numbers out my butt, but someone's listening.
Yeah.
Someone's listening.
Yeah.
Just good consolidation over a week. We'll talk about that in the other session, I'm assuming, eventually. But
Yeah.
good consolidation on the level that you picked is always a good thing. But yeah, I had it there. Like, I was looking for to have more notes for this session. So that's a good place to start is Wolf.
Yeah.
So I'm glad you brought it in the conversation. But yeah, that's another one I guess proverbial we called Wolf. You could have got again that $2 position, and it's real easy to defy your risk there. That was the whole point of that. Just real easy to defy your risk with shares and kind of take the time out of it, right? Like, I don't know.
Yeah. I was talking to a guy on Twitter that he was talking about AMC, and he had posted, he had the timestamp on it. He posted a good chart, but he bought on Monday. He bought weeklies, and he didn't take a big loss or anything. Like, he just saw, AMC didn't do much this week, and so by Tuesday, Wednesday, he just he got out of them, and then he was just like, just so frustrated that it took off, Friday after hours, when he saw the setup and everything, and he's like, how do people deal with this? And that's when I posted to him. I'm like, well, first of all, like 80% shares, 20% options. Go further, I go further out with options typically, and that give yourself time to be right. And I think that's something a lot of beginners don't do, because weeklies are cheaper and they get a higher percentage. So it's like there's a temptation to keep trading those when you can just let some money sit for a while and it can take off. And AMC is not even the best example because it's kind of a little bit boom or bust. But something like the oil stocks we do, or steel and copper, whatever, you give yourself some time, and the plan will come together, and you're not sitting there worried about what's happening day to day as much as you would be with a weekly. And especially, you can't swing something like that. I don't know why people use that word for a weekly option when overnight, if the stock does nothing, you're losing money.
Hey,
those are tough.
My rule this year is it's only a swing if you can go play around a golf and not worry about it.
Yeah, exactly.
So I had better notes in these notes, just so you know. So the first one was first two kind of similar topics, but just get your feeling on it overall. Market getting oversold,
overbought.
Yeah, sorry, that's
oversold.
No, I mean,
yeah.
You know what I meant. You know me, I'm backwards half time.
I think. Yeah, no, it's
overextended. That's what I probably meant to say.
Tech's definitely overextended. Oil is not. Healthcare is not really. Industrials. Industrials are a bit, but they've just been really. They've been strong. I mean, it'd be tough to short those. So they're in kind of a the sort of parabolic move up. Some of them like DE and a few others. But yeah, I think when people say the market, like they're talking about Apple and they're talking about um,
Sure.
Microsoft and SPY QQQ. So yeah, I think those I would say yes, and we're just seeing some rotation. A lot of staples are healthy and have some more room up. You saw like Pepsi had really good earnings and seeing some moves there. Some of the big retail, big box stores are still a little oversold. Um, so yeah, I would say yes. The indices are likely to pull back. A lot of the bigger names, Tesla and Netflix did not exactly get earnings off to a good
Yep.
start.
Yep.
So could definitely see more of that. I posted. I mean, I follow some more obscure type stuff like MDB, and I just kind of see the flow on that checking down, 10%, not in a day or something, but just over time. So yeah, I think we're going to see some uh, some pullbacks here.
Yeah, definitely just sentiment is that we're getting to some higher levels, definitely. And I mean, to me, it's kind of a double-edged sword, and I'll talk about the second edge in a second. But just kind of feels like you kind of hit it. Like the we're not going to get the really big beats. Everything's going to be kind of mundane. We're keeping the lights on, and we're already to a point to where people are in, so you don't buy more on. We're staying alive with the ERs. Like you said,
Yeah,
Tesla kind of already started that. So, um, but the other other side of that coin is we're moving into the summer market, or we have to at some point in time, right?
yeah,
Historically, August and September are the worst 2 months, but September is worse than August, um, just on volume and overall volatility. Um, what point do you see that coming in, or is it gonna? Are we gonna get hot pennies this summer? How do you kind of see that?
uh, yeah. So in the option flow, the the mid caps and the small caps are getting a lot more attention than normal, and it's like I don't even do that. I mean, I don't actively look for them, but they just sort of they kind of froth to the top, and so yeah, I'm definitely seeing that. The you know so okay, we're kind of at this moment. I mean, especially with QQQ, it's like, are we even going to at least try to test all-time highs? And like we're so close to it. I'm wondering if it acts kind of as a magnet a bit, but I think we definitely could see some sustained selling in the bigger stuff and get kind of the smaller squeezes going. And if AMC has any follow through, then
That's a good one too.
all bets are off with that. So yeah, I definitely would be looking at mid caps and smaller caps, and I would not try to be buying into pullbacks on some of this overextended stuff. I mean, especially in tech.
Yeah, I'm just
And I
asking.
but
Go ahead.
oh, and one more thing, the what's going on with freight and trucking and all that is really bad right now, and that sometimes is a kind of leading indicator of economic conditions have not been that great anyway. But if the market decides to start caring about that, that could send some things down. And we saw that with FedEx. FedEx after hours one day wasn't even connected to earnings, just came out with a statement about the economy. I think they dropped like 10%. I think SPY dropped almost 2% the next day. So that watching what's going on with like UPS, Yellow, like
Yellow. Yes.
which one we'll talk about. Like
Yeah.
so, that's important. That's important to watch. So if you're kind of a macro person, I would keep an eye on that.
Yeah.
It's not a short signal or anything, but it can start something.
If you're paying somebody for a goddamn anything financial advice this week, and it's on a day-to-day basis, and they don't mention yellow this week, fire their ass. Just fire them.
Yeah.
Just fire them. The reason I asked that is because, well, the one that's gonna make most sense to you is DWAC, but LGHL, DWAC.
Yeah.
What's the other one that we just mentioned? There was another one in there, but some of these crappy pennies, and I think you kind of are seeing it with good old China too. Some of these crappy pennies, man, when they get to moving, do they make moves? And that's usually when that market starts heating up. And I just see, people that have made money and are paper handed, um,
Yeah.
taking their 100% gains, and wanting to still play in the summer. And I just try to read the socials
Yeah.
just try to read the socials
Yeah.
that way, and that's kind of how I see the socials going. And I mean, there's a lot of things I can't put Fubo in there, right? But there's a lot of things that I'm just curious, like their momentum's still there. They're not the lagging sectors currently. And is that where the summer's going to take us? Because if so, I'll definitely want to be ready for
I'm
that.
I'm leaning towards that, and I've gotten better about reading the flow on some of those because it gets a little confusing with I mean we have a lot of stocks that are under 250 where the lowest strike is 250,
Yeah,
and
yeah,
those are tricky, with the flow, but and then you get flow that's so low that it's like the 50-cent stuff is hard to read,
sure,
for
sure.
options too. So kind of I guess the sweet spot there is stocks that are $1 to $3, or maybe I don't know, one to $8, where the strikes start at one. Like those I can really get a good feel for. But yeah, I would definitely be paying attention to a lot of those. A mistake I see on Twitter is people making that connection to the IWM. So a lot of these
Yeah.
stocks aren't really in there, and they're not relevant to that. That is those are kind of like legitimate small caps. And like if you, I would just say for anyone, if you're gonna be trading options on one of these index funds, just look up what's in it. I mean, it takes you 5 minutes, but um, get a good sense of that. And I actually did really well on with this QQQ rebalancing, the bump that AVGO got from that. Like it's up to 3% now of QQQ, and that really it
Okay.
moved 2.5% on Friday, in part because of that. But yeah, I mean, I don't understand why people just would put money in something and not even know what it is, and I just see so much of that on Twitter.
Oh yeah, yeah. No, there's definitely no DD over there.
Yeah,
I sent you a picture. I think you kind of seen it because you slowed down a little bit when I
yeah,
sent it. But it was just because when I brought up my notes and the first topic, you brought up the third topic on your own, and I just wanted
yeah.
it to be documented. But lagging sectors, and that shouldn't be. And one that I had was oil. So it's funny that literally
Yeah,
you already said that. Um,
yeah.
so yeah, I mean,
Um,
I've said it. I mean, since the very first thing I probably ever said to you about oil was that I'm usually bullish going into the March, April, May because it heats up in the summer months. Like right now is usually when
yeah.
oil charts are screaming. This reporting season usually those charts do really well, and we're not seeing that.
No, no, we're not. And there's also you're just seeing levels where they're not breaking down, and Exxon 100 is kind of the one that stands out. And I just think like if you're buying Exxon at 100, you can buy shares
Okay.
there or options, whatever you want. Just be aware that you might need to scale in and out because it's going to go 100 to 103 and then back to 100, all that. But yeah, oil I think could explosive here. We caught the bottom on natural gas about to the penny. So anybody in that is doing pretty well. But yeah, I mean, oil's definitely lagging. It's kind of lower than it should be. Futures like look healthy and all that. The flow's fine. So make use of the levels that we have. Um, I'd say some of the biggest moves are going to be in anything with drilling and exploration. I keep, those mid caps. So kind of stay on those. But yeah, there's definitely going to be money to be made in some of those bigger names. And if you don't like to short the market, which a lot of people don't, and I understand, oil can be a place to look when tech's having a bad day. So definitely be aware of that.
Yeah, I like some of the bigger names, and I did stay on the small ones. I stayed on rig until it went past 660.
Yeah.
um, I like some of the other regular names in oil right now. But I'll save that for the other session. But I
Yeah.
just
Yeah.
noticed a lot of them, like they were, yeah, they're all in a really good spots, and just my normal catalyst for oil, like that this is when you buy. Like, why aren't we buying this? I did see some news I kind of wanted to get your opinion on. And I believe it was England, if not all the EU, but they're hoarding natural gas and oil. Like they said they're going to fill
Yes.
fill their
Yeah.
reserves and then some. Um, wouldn't that drive prices up, right? Shouldn't that be driving prices
Uh,
up?
yeah. No, it definitely should. And this is I'm kind of just waiting, and I'm glad I went with UNG instead of Boyle. I just yeah, there was just some uncertainty with Boyle with the split and all that if that was going to happen. But yeah, caught UNG around $6 and it's in there at 727.
Yep.
This is going to break out, I think, to 9 to 12 maybe. Is sort of what I'm seeing in the flow on it. So I know there's a couple other people, or at least one other
What up?
person in
What
it.
up, Pele?
Yeah. So yeah, I think we're kind of sitting pretty there, and um, these are well, just a crazy ride with natural gas. I mean, kind of historic highs all the way down, and then back up. Probably going to settle in the middle somewhere. But yeah, I'm with you there. Um,
Do you have any other? Do
Also,
you have any other sector besides oil? You have another one that's like
that
lagging.
that's lagging.
Yeah.
Yeah, it'd be healthcare,
Okay.
and
Okay.
we're we you kind of see the big dogs there of Humana and UNH. Humana, I think, still has some room to $500. Sitting at 456 right now, and then UNH is seeing leaps out to some crazy numbers like 650 and things. But even beyond them, you look at um, just like drugstores, just
Mm.
way the hell oversold still.
Yeah. Yeah.
CVS and Walgreens.
Rad.
We talk about Rad. Rad could kind of get some of the benefit of some of the squeeze action happening too. And then like the whole narrative on like COVID and vaccines kind of completely went against some of these companies, but Pfizer sitting there at $37. That's pretty low. mRNA. We saw what happened with NVAX. So there's big opportunities in healthcare. Um, weeds tricky. Just got to get that government push. But I posted. I was like Tilray at 150.
Yep.
I think I just said like why the hell not? That's not really like some glowing flow endorsement or anything, but I just didn't see it breaking down, and so it went. I got out at like 172 or something. It went a little further, but yeah, there's some of those charts. You look for the weed companies, like are they going to survive? And those are the ones I would go for. I wouldn't go for like the worst of the worst in that sector, but yeah, there's some definitely some opportunities there. Lagging sectors, defense is in kind of a bad spot right now. I think I don't. I think those could fall significantly, but they have some earnings this week. We could kind of get some clarity there, and I still think that a lot of things like copper obviously has been doing pretty well, but that sector still has a lot of upside to me, not overextended at all, and especially you start to get some of the smaller names. And I saw you do that with your notes on an aluminum stock, but yeah, that's kind of where we need to be looking is some of um, some of the small mid caps that are trading under the price of the commodity that sort of just haven't caught up yet. There's going to be a lot of opportunities there.
Yeah, I mean, we got kind of a. The reason I asked about the downside one is because I'm anticipating uh, a stair stepper market. I mean, big picture, right? Like it's not going to be straight
Yeah,
up. I've said this a million times. I've said, we went from August to April, buy some stuff, to this market's not going to go straight up. It should stair step up. So there's got to be some flat parts of the stairs or a little bit of pullback. However you want to look at it, that's what people are going to perceive as pullback, um, building that base to go sideways. So when that happens, the stuff that's beat up, the oversold stuff, I want to see just that what doesn't budge in poor market conditions, because that's concrete to me to trade off of, and I just want to know where to fish. Um, so
yeah, and I think even in okay, so here's a couple examples too. AT&T and Verizon just took
yep,
like a
yep,
complete beating, right? And those can be really slow in their recovery, but your risk is kind of limited down here if you just if you just plan it right. So there's plays like that. I look at something like Snapchat, where obviously we had such good levels on that. I hate to even buy it over $9 because we were below that and everything. But it's just the big question is, and they have earnings coming up. Got to get through that first. But it's kind of like, is this finally done? Or, this company is clearly going to be around. There's these huge gaps, from like you get to $15, like 15 to 20 something, are we going to get back into that? And that's the big question for me is like I look at stocks like that or Hood, Coin obviously, Coin obviously made the move, but Coin really can go much further. I mean, it can go to
sure,
I see flow to 160 on it.
sure.
So that's it. It's just it's a decision point for that stuff, and those decisions are happening while Apple's sitting up there at all time high, and Microsoft is. So those are probably not going to continue up there much longer. So then, where does the money go? And that's what I try to find is those rotations, because I don't think that people are just going to pull their money completely out of the market. They want to be in this.
Yeah, yeah,
So so that's what we're all about. And it's why like I avoid saying things like tech is overbought. But like, which tech is Saber overbought? Is I mean, you're not talking about that. So I think
hmm
that precision with the market cap language is so crucial to what we do, and that's how we're gonna find things.
is Matterport overbought?
Yeah, exactly right.
This one's right. Yeah, no,
Yeah,
and again, to kind of full circle, and you already did with the Tilray. You can define your risk on a lotto on a lot of these ones. You know what I mean? You
yeah,
could say, like, all right, I only want to put in $60 in this lotto, and you don't have to worry about the time decay. And
yeah. And I mean so there's a few examples of just complete disasters, right? Well, let's say like you saw like Tattoo Chef at you know $1.10, and you're like, I'm gonna I'll get some shares here, and it's dead. It like completely imploded and is OTC now. Now, obviously, you wouldn't want to, even if you're buying shares that cheap. Don't take shares to zero, or don't take shares to 7 cents. But you would have said like it broke down on those earnings, and you get to like 85 cents. It's like, okay, enough's enough. I'm done. Same thing with Mullen,
yeah,
whatever. But that's pretty rare that some of these are going to break down
you
to
can
that extent. But
you can
for anyone, you have a plan to get out.
you can well, that's the thing I'm saying. Like, you get $60, you can define your risk. Um,
Yeah.
There's a big difference if I buy 100 shares and I'm put $600 in a trade, as opposed to if I buy 6,000 shares and put $6,000 into a trade. My risk percentage wise is way different. So my position usually dictates or my risk usually dictates my position, right? Like
Yeah.
I
Yeah.
mean, if I need room, I have to give myself room. And if you have a $60 lotto, I mean, you can let that. I hate saying it this way, but you can let that go 50% before you say, "All right, I'm done," because
Yeah. Oh yeah.
you're defining your risk to $30. But you should definitely get used to having a plan before you enter any trade, writing down your defined risk. You don't just enter it and say, let's see what happens. Like, you should already have a plan. You
Um,
should have a plan where you're going to rebuy. You should have a plan where you're going to take profit. You should have a plan where you want to first put in a stop loss, like back at entry. You should have all that stuff kind of, or whatever your style dictates. You should already have that predetermined. Not you,
yes.
not you, not you,
Absolutely.
but the
No,
proverbial.
no, no. I think for anybody, and I think people who are new sometimes, they're looking for buy signals and they're excited to trade, and I'll just mention a stock, and then all of a sudden, like some guy buys $5,000 of weeklies on it. I'm like, dude, no, 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 no. That's not how this works. Like I'm talking it out with Unc first, and just trying to get a feel for where this could go, and I'm mentioning the contracts because that's how our our conversations work. So yeah, I mean, having a plan, defining your risk. Don't try to come up with a plan after it's already read. That's definitely
if
true.
if you want
Um,
to if you want to buy mentions in our room, you better have a okay account size and buy shares when I mention things in the morning.
yeah, no,
I mean
exactly. Yeah,
that's the safest way. I mean that's just what it is. Options are just too many moving parts. You have to time the
yeah,
trade.
yeah.
You have to time the trade.
Um, well, and I think there are some examples. I do try to let people know when I think something is very much imminent, and Carvana was a good example when they were buying, you know, a week out at the highest possible strike at like 59C.
Mm-hmm.
And it's like, that's not random and that's not a gambler. There's something here. And then it just completely took off. And that's going to be the thing with these small and mid caps. I think we have to get used to
Just getting
this
in.
out, these, yeah, getting in, and then these just outlandish strikes that they're buying. Um, they don't look as crazy a week later
Do you
sometimes.
do you
So
buy Carvana 59 in that situation, or do you buy something different strike? Like you buy
I
more time
so
closer to the
I don't
money. I mean, what do you how do you attack
uh
that? How do you
I
attack?
define my risk there by that contract was $30, and I was like, okay, I'll just
Oh,
buy
okay.
two of these.
So you bought what they
And
bought. Wells bought there.
I bought what they bought. Because to me it'd be more risky to go close to the money, and you end up spending $300-400, and then you're stuck
Sure.
in these Carvana high IV options in a stock that regularly pulls back 6% after hours.
Yeah.
So I'd rather go way the hell out there with them, and then if those contracts drop, this is the 50% example. They drop 50%. Like, okay, I lost $50 and whatever. I'll just move on.
Yep.
But the upside was there, and um, they went to like 500. Only kept one through that, but yeah, that's where I would say, like, you just with high IV stocks, I don't like to be risking more than $100 on those typically. So that's sort of where I'm at. And Goose is the same way.
Not to change subject or start a new topic because I don't want to do that. But that's the thing I'm figuring out about a lot of these 1,000%ers, 500%er Twitter people is they lose that 20, $30 constantly, and the one they win they post, but they're like, oh, I just lost $20, I just lost $30, and then the one they
Oh
hit,
yeah, yeah.
they're like, look, I'm a genius because it
Oh,
covers
and the
it covers to 10 trades, right? It covers or 6 trades or whatever. It covers like 5 6 trades if you hit one out the park like that.
Yeah, definitely, and they're really good about, like, if you look at their watch lists and stuff, like they're very non-committal about it. They'll say, like, just watching no position,
They don't got a top
whatever.
three. No
And
top
then
three.
yeah, they're not going to put themselves out there.
Not like that.
And they'll take both sides of a trade with the subscription money and then post the one that wins. So yeah, there's a lot of that.
Perfect. All right, let's do some spy action. Um,
Yeah,
we had interesting week, but I seen a lot more range. We ended up with 449 on the low and 456 on the high. Um, I had 454 and it went $2 over that. You had 53. You kind of Bob Barkered me there.
yeah,
I had way more downside than you, and even yours came up $9 short on the downside. So I guess
yeah.
let's start talking about that part. Like
Well, the
no
the uh, the
downside.
down the downside happened in QQQ, not this one. So that was kind of interesting how that worked out because yeah, that day that QQQ went down 2%, SPY wasn't anywhere close to that. So uh, that tells me it really is the safety stocks and like healthcare and everything and oil a bit like that help prop SPY up. So that kind might kind of be the story that we SPY doesn't have the aggressive moves down, and we're just not going to get the big downsides that you might in some others. So in terms of flow, I'm kind of looking at about 447 and upside. I don't think it's going to be much this week, but 455 be my upside.
Interesting. So about five. I thought we'd kind of stay inside this candle last week. I didn't see being tight consolidation to the top. Um, really don't know if we can break the last high. The 62 really kind of stands out to me as way too high. I'm gonna go 57 to the top. I just think we will have an okay Monday. But I'm going to go tight range again. And I don't want to go inside this candle. So I'm going to go to hour chart here. See what we get over here. Yeah, you are right. You're pretty much you're pretty much there on the bottom, P. Um,
Yeah.
yeah, I'm going to go 48. So, I mean, I'm two above you on the top, one below you. I think we're seeing it very similar. One above you on the bottom. Um,
Yeah.
that's a what? $9 range for me, about $8 range for you. Um, yeah, I see that tight consolidation for one more week, 100%. But I think that's what we need to get that. Like again, that's what we need to get that stair stepper pattern. Is we need a little bit of sidewaysness inside of a zone, where selling pressure doesn't kick in, and then
Yeah.
buyers want to still step in because the news is good. Um, I mean, that's what we're looking for to happen 4 or 5 times in the next year. And then, I mean, I'll throw one out there that I'm confident in, and then the video will be 1800 by 2025. That's what you're looking for.
Yeah, no, absolutely. And that's where I still, I mean, tech leaps is what got me bullish back in November. And those were for this summer. And so, those panned out nicely. I think it was like snow 180 and it went past that. And then, so now the 2025 leaps, that's where you're seeing, um, some pretty, high numbers in those. And well, I'll give you an example here. Yeah, so that's where you're seeing like now you see snow 240
Mm-hmm.
as a leap.
Mm-hmm.
So that is not a stock that's going to do that in isolation. And so you kind of look at what the bigger stocks are going to do. AMD going another 40%, like all of that I think is definitely plausible. And to
For
me it's
sure,
kind
that's
of
a good one.
It's where the market wants to go, and sort of is ironically the path of least resistance is to keep it moving up, and all the macro stuff and the 2008 chart comparisons and dot-com bubble and all that stuff. I just don't. The market doesn't seem to be buying into any of that. That's all just noise.
No, yeah, 100%. That's why we don't do it. I don't know how else to say
Yeah,
it.
yeah,
Kind of full circle here, and pound the table on it. Like you were just saying, like the flow comes in for snow and X, Y, and Z, and Facebook. No, sorry, Tesla was just a good example with the 280. Um,
yeah,
stuff like that. You kind of just gives direction. And I think that's why we excel at what we do, is because not only do we kind of get in front of moves, but we also know where they're going to end up at. Like Wolf,
yeah.
369 mentioned. That was the final note. Just to mention that note again, rub that one in. But you ready to go find another Wolf or two?
Oh yeah, let's do it. Yeah,
all
we
right,
can do that.
all right, let's get to work.
All right.